Hey everybody, welcome back to Chipstock Investor. Happy weekends.
Whatever this video is posting, happy whatever day it is.
Happy whatever day it is. We hope you're having a great day. We're back for more coverage of Arista Networks. If you haven't watched the video about whether or not Nvidia will kill Arista Networks, check it out. Link right here in the description below. This is where we left you, looking at the networking group of businesses, Arista in a very crowded space in networking. So why are so many companies choosing to spend money with Arista?
Yeah, this is a great question, and this is something we want to really double down on in 2025 here at Chipstock Investor. The why. If you want to be a great investor, you need to figure that out. Why are companies making money? It sounds like semantics, but it's not. And hopefully it becomes clear the difference as we get into a little more depth on Arista Networks here. Why are they getting a steady tailwind from the modernization of data centers? Let's start with old networking infrastructure first, and then we'll continue on with cloud data centers, and then we'll finish off with AI data centers. So let's take a look at another slide here from Arista's Q3 2024 earnings report.
This is a good example of some old infrastructure getting a refresh. Arista notes this design win with Alabama Fiber Network. Of course, the internet is still very much part of the data center secular growth trend. And as application capabilities increase, old infrastructure has to be refreshed. This can be big cable interconnects between data centers to fiber to the home and upgrades to smaller edge networks, data center locations. Arista is a great partner in networking and can be some of the best total cost of ownership around with its products, services, and engineering expertise.
We'll just very briefly show you these charts. Maybe you remember them from our IT development timeline video that we did over the summer regarding Akamai and Cloudflare. Cloudflare in particular, a very popular stock, a modern take on internet infrastructure, but not a lot of investors know who Akamai is. And if you want to understand this old infrastructure that needs upgraded so that the internet is still able to deliver the awesome content that we stream every day, like Netflix, for example, you have to understand how companies like Akamai works.
Or Chipstock Investor.
Yeah, definitely Chipstock Investor. Turn off Netflix, watch more Chipstock Investor, like these videos on Akamai and Cloudflare. It might help with your understanding on the types of networks and data centers that Arista is helping upgrade right now.
Before we jump into cloud data centers, word from our sponsor of today's video, public.com.
So you perhaps know there's been another sell-off in the bond market. The U.S. Federal Reserve is gradually lowering interest rates. And because of the sell-off in the bond market, despite those lowered interest rates, you can actually lock in a yield upwards of 7% annualized on a bond account at public.com.
Interest rate is not locked in until you invest. You can take a look at that new bond account from public.com/CSI to get your interest rate locked in.
Yeah, and that's an important point because if the Fed continues to lower interest rates, your interest rate that you get on like your savings account and even the money market in your brokerage account is going to gradually decrease over time. But a bond account is a way that you can lock in a higher interest rate for longer, even as other interest rates decline.
Take a look at the new bond account from public.com/CSI, link in the description below. Okay, let's talk about cloud data centers now. There's pretty much every organization around the world continues to migrate their computing workloads to the cloud in one form or another. Migrating that data to the cloud is where Arista really shines.
Now, we have a couple of charts here to help you understand what we're about to talk about. This one is from chip designer Marvell Technology Group. Let's do a couple of definitions here. So in a data center, you may hear companies refer to the back end and the front end. So when they're talking about the back end of the data center, that's referring to all of the CPUs, and in recent years, maybe a few GPUs and accelerators from Nvidia, or accelerators or XPUs from Broadcom, which helps Google with their TPUs. It's a type of accelerator. All of these chips are networked together, usually using Ethernet cables and router switches from a company like Arista. And then you also have some storage, that's data that's being held in memory, both long-term and short-term caching. This is all networked together into a back-end infrastructure, and that's what makes these data centers operate in the first place. It's what makes the cloud actually work. And so in this graphic from Marvell, when you hear someone talking about the back-end infrastructure of a data center, that's the portion that's in gray in the circled data center architecture picture that's on the right.
And the front end of the network is actually what you and I are interacting with. If you think of Netflix, for example, the back end is what makes the app work properly. But what you and I interact with, looking through the content library, watching the video, is the result of what's happening on the front end of the network. The front end of the network is illustrated in the teal. We were just talking about which color we would use to describe this, but we've settled on blue-green. The blue-green is the front end of the network. Teal is not a universal.
No, definitely not a universal.
Aquamarine. Aquamarine. Now that we've settled the color of the front end of the network, let's talk about how Arista actually helps with the front end and back end of a network. Arista's solutions are open source. We've covered that, but Nick, can you help us understand this a little bit better?
So hopefully the point you've gotten from this is that data centers are really complex. They're complicated things. You have thousands and thousands of components that are interconnected and networked together, both on the back end and the front end of these cloud data centers. So when Arista says that they are a software-defined data center business, they create a software-defined networking environment. What that means is Arista solutions can ease the burden of custom engineering the hardware. When a company says, we have a data center that we want to build or that we need to upgrade for 2024, for 2025, instead of doing the whole thing from scratch, you can grab a pre-designed model from Arista. They can customize it to your specific needs, and then you can manage it using the software, regardless of whether you have all Arista hardware operating in your data center, or if you've grabbed other components besides Arista and interconnected them all together. You can still manage it from one place using software without all of the extensive engineering legwork going on in the data center directly. Now, that doesn't mean you don't have an engineering team that works in the data center, but because it's software defined, a lot of the work can be automated using the software versus having boots on the ground, rewiring things, ripping things out, putting things in other places. And so Arista has built its suite of hardware and software services over the years to help ease this burden of growing complexity in the data center. And it can work both in the cloud. It can also work in more legacy on-prem networks. Perhaps it's a company that doesn't have their data center hooked up to the internet. It's just hooked up to their own private network. The whole system can work seamlessly, regardless of what your needs actually are. So this is the result of many years of work at Arista. And despite them being open source and competing in a very, very complex web of other companies all trying to vie for the same data center dollars, Arista very often wins out against those competitors.
So if all of that wasn't complicated enough, now we're adding in a new layer of computing, AI. What is already a very complex back-end and front-end system now has a new layer featuring GPUs or XPUs in their servers. You can see that illustrated once again from this slide from Marvell. They're adding this new layer in the back end, that dark blue color at the bottom. Clusters of tens of thousands of GPUs or XPUs are getting installed in that back end for AI training and other high performance compute work by hyperscalers like Google, Meta, Amazon, AWS. All of those GPUs and XPUs are scaling towards around 1 million of them being interconnected. Nvidia has also had a breakthrough that we've covered in the past with the acquisition of Mellanox and its InfiniBand technology that made all of this back-end interconnecting and scaling possible.
And we covered that in the last video, Arista versus Nvidia. So what's the why for Arista right now? Why would a customer looking to expand an existing data center or build a new data center, purpose-built for accelerated computing and AI, why would they choose to spend with Arista if Nvidia has the full suite of both computing and networking that you would need. So let's switch to a couple other slides from another chip designer, Broadcom, which we told you last video is actually one of Arista's top suppliers and partners. Early in 2024, the same week Nvidia was having its GTC, Broadcom had its own AI and accelerated computing event where they talked about their networking chips being able to scale these XPUs. This is a very general architecture that is probably roughly what Google Cloud looks like with all of their TPUs interconnected, and especially in the front end of the data center, where a lot of this infrastructure is being installed and deployed for inference, not AI training in the back end of the network. That's where Nvidia's GPUs like the Hopper H200s and InfiniBand are being installed for AI training. This is probably more like the inference happening at the front of the data center, the app that you and I actually interact with. This is where Broadcom chips that Arista often uses for its routers and switches really makes sense to install. Now, this kind of takes us back to the debate here about Ethernet being installed in the back end of the network, including for AI training, because InfiniBand from Nvidia has kind of won the day, but that doesn't mean Arista isn't getting any benefit whatsoever in the back end of the data center.
No, it does not. Because of Arista's open source hardware, it can play nice with all the other hardware. And so Arista's Ethernet-based standards are making quite a few inroads, and management stated on the Q3 earnings call that it could be about $750 million in AI back-end revenue in 2025, which is a nice add-on to the business that didn't exist before.
Yeah, Arista's management actually said, thanks, NVIDIA. Thanks for helping us land $750 million in new annual revenue. Peanuts for NVIDIA, of course, but a nice add-on for Arista.
So that's the back end related to AI training. But what about the front end of an AI network that's used for inference?
Yeah, here's another slide, this one from an Arista competitor, Juniper Networks, which is still in process of being acquired by HPE. On the front end of these new data centers, they're going to be networked together for inference, AI inference purposes, almost entirely, or the goal would be 100% within the next few years, networked together using Ethernet, again, being the standard that Arista has built its company upon. So the new $750 million in AI backend revenue that Arista mentioned on the last call sort of implies that the core existing business for Arista, the old networking, like internet infrastructure and old, if we can call it that, cloud data centers, is barely growing at all. We're going to show you the growth outlook for 2025 that Arista provided. And so if you add in $750 million in new revenue, the implication is the rest of the business not growing that much. So the build out of this new front end AI inference data center, basically it sounds like Arista's not getting a lot of benefit from this yet. What's going on here? It seems that the hyperscalers, which make up a big bulk of Arista's revenue, are still prioritizing the back end of these new accelerated computing and AI data centers. And they're still kind of kicking the can down the road, so to speak, for the front end and inference. Or as NVIDIA hinted on its earnings call this past week, as some of these companies deploy some of the Hopper architecture GPUs for AI training, they're going to get Blackwell chips in 2025. Maybe they're just going to take some of the Hopper architecture that they have installed already and migrate that to inference work on the front end. So what exactly is the benefit to Arista here? What's the why for Arista? Why are they going to benefit from these new data centers if NVIDIA is gobbling up so much? Arista thinks that the entire data center, both the back end and the front end, be it for cloud or for AI or whatever, is going to gradually migrate to Ethernet. So perhaps some of these front-end networks are taking a bit more time for money to trickle into. But once it does eventually start to get some more attention from the hyperscalers, Arista thinks it will be there with its Ethernet-based standards. And that's where other things like the Ultra Ethernet Consortium that we discussed earlier this year come into play. Arista is a founding partner for this Ultra Ethernet Consortium that's trying to push the boundaries of what's possible for Ethernet so that it can better compete with things like InfiniBand. So long story short, Arista is in good shape still.
This is all very good news for Arista. Looking at their fiscal year 2025 financial outlook, they expect a 15 to 17% revenue increase year over year. Gross margin they expect to be between 60 and 62%, and their operating margin between 43 and 44%.
And then their midterm goals. This is through 2026. Casey, you mentioned gross margin dipping down to 60 to 62% next year. They do expect that margin to increase once again, back above 62%, upwards of 64% by 2026. And along the way, they expect an average mid-teens percentage increase in revenue. So some of the margin expansion story that we talked about in the last video, maybe not at play as much in the next couple of years for Arista. This basically implies that, yes, the company is going to get some benefit from cloud data center upgrades, old infrastructure upgrades, and a little bit of AI growth. But Arista is in investment mode right now. They're funneling some research and development dollars back into the business to remain relevant in this new era for data center computing. Overall, though, if you're a long-term shareholder, this is good news. This is a very solid outlook for Arista.
Another item that we don't want to forget about Arista is their huge bank account. They've got plenty of cash on board, and they could use this for some smaller acquisitions or possibly one maybe transformative acquisition.
Yeah, absolutely. That could be a great way for them to very quickly accelerate their growth trajectory in this new AI data center era. Plenty of cash on hand. There's a lot of software businesses that could be acquired these days that participate in the whole AI data center space that Arista could handily just outright purchase for cash right now.
Before we close out the video, let's talk about Arista's valuation. Given all the strengths that Arista has and the massive secular growth trend that is data centers, ANET stock trades for a pretty high premium. Let's go over a reverse discounted cash flow to see what the market is assuming based on the current stock price.
We get a lot of questions about this reverse DCF. Remember, a reverse DCF is not based on our expectations for the stock. A reverse DCF is one scenario that gets us to fair value on the stock price today. So it's not our assumption. It's one scenario that Wall Street is assuming based on the stock price today. So for this particular reverse DCF, we've actually used Arista's midterm financial targets, that mid-teens average annual growth rate in revenue through 2026. If we factor for maybe a re-acceleration in profit margins through 2026, as well as Arista's small share repurchase program, that should get us to roughly 20% blended per share profit growth. We have earnings per share and free cash flow per share. We've just taken an average of those two things here. And then what would need to be the assumption beyond 2026? Well, to get us to the current stock price, a terminal growth rate of just over 6%, discount rate of 10%, that gets us to the fair value of about 370, 380, at least as of the recording of this on November 18th. 2024. Stock price could go higher or lower. You can adjust the reverse DCF growth rates accordingly to figure out what the market is assuming for Arista Networks to justify the fair value of whatever the stock is. But there you have it.
If you don't want to use the reverse DCF model, you can look at the PEG ratio. Take a look at that here on screen. This is from our friends at finchat.io. PEG ratio is currently approaching 2.0. It's sitting at 1.7 on a 1-year forward basis. So Nick, tell me a little bit about the valuation based on the PEG ratio.
Yeah, you start getting to a PEG ratio of 2 and above, the stock price might be getting a little bit frothy. It may be either we're not factoring for enough years worth of growth out into the future, or investors are just getting way too over optimistic. However you want to look at it, I think the message is the same. At this particular juncture, you probably don't want to chase Arista Networks stock higher and blow out a big chunk of your portfolio on the stock all in one go. Now, if the stock price were to dip back towards 1.0 on a PEG ratio basis, that would imply, based on forward expectations for earnings growth, maybe Arista is getting to be a better value again. I think Ultimately, though, our standard message here would apply. Take it slow. There's no need to chase and bet on these things hoping that you're going to turn into a millionaire overnight investing in one company. Invest slowly, gradually over time, nibble on the stock, or use a monthly or quarterly dollar cost average plan, and let Arista Networks prove its worth to you personally gradually over time, over the course of perhaps several years.
Wise advice, sage wisdom from Chipstock Investor.
It's not popular, but it can save you from your own emotions when the stock inevitably goes through some very wild fluctuations in price to the downside.
Thanks everybody for watching this episode on Arista Networks. Make sure you sub to the channel and check out our Semiconductor Insider membership. This research for this video and the last video were both posted on our Discord channel before it came out in video form, about a week, in fact, before it came out in video. So check it out. You might be interested. $5 a month until 2025.
Lock it in. And of course, this is part of a broader discussion we're having on other data center companies and all the opportunities that are available within this very, very large, approaching $2 trillion in total value industry. There's a lot of ways to invest in this. Arista Networks and Nvidia aren't the only two.
See you all again soon at Chipstock Investor.